The IRS wants you to believe they're looking for the truth, but the truth is they're looking for money, okay? And to get it, they can stretch the law as far as it can go, even holding you responsible for fraud you didn't commit. Okay, today we're talking about a court case where the IRS just won unlimited power to audit your tax return forever and what you should do to prevent this from happening to you. I'm Jasmine DiLucci. I'm a tax attorney, CPA, and enrolled agent. I got my first tax license in high school because I love tax law, and today I run my CPA firm and my tax law firm. But I also post online now to make actual tax law accessible to everyone, not just for people with attorneys on retainer. So the case I'm talking about that just gave the IRS unlimited audit power is Murrin v. Commissioner. And here's what happened and why it matters for you. The Murrins filed their tax returns year after year, like most of us, and they even hired a professional preparer to handle everything. But in 2019, the IRS issued a notice of deficiency proposing additional tax, penalties, and interest for their 1993 through 1999 tax returns. That's right. You thought the IRS audit window was 3 years, and now the IRS is asserting they should be able to go back 25 years. Even if there was only a small tax adjustment 25 years ago, the interest and penalties that compound for 25 years are astronomical. Here's why this happened. The IRS investigated the tax return preparer of the returns. They found that that professional had secretly inserted fraudulent entries into their returns with the intent to evade tax. Okay, the Murrins didn't know, but the IRS argued that because the return was fraudulent, even though it wasn't due to the taxpayer's fraud, but instead due to the preparer's fraud, the statute of limitations should be indefinite, since under Section 6501(c)(1), if a return is false or fraudulent with intent to evade tax, the IRS can assess tax at any time. No 3-year limit, no limit at all, just an unlimited audit window. Imagine needing to find receipts and support for a return that was filed 25 years ago. The Murrins pushed back, arguing, wait, the law should only apply if we committed the fraud, not our preparer. But both tax court and later the Third Circuit disagreed. They found that it doesn't matter who commits the fraud. If the return is fraudulent, the IRS has no limit. Think about how extreme this is. Okay, the Murrins filed their return on time, relied on a professional, and had no idea their returns were tainted, yet decades later, the IRS said that they were still fair game. So how do you protect yourself? First is I'd recommend choosing an accountant wisely. Okay, be intentional with your choice and know that it can come with risks that leave you holding the bag. Okay, 2, review everything before you sign and file. If something doesn't make sense, just ask. It's important to understand the tax positions that you're taking, and it's very important to make sure there is no fraud on your return before filing. The Murrin case reminds us the IRS isn't just a neutral party, okay? They're not looking to try to be fair, they're looking for revenue, and they do push boundaries. And if that means finding creative and new arguments that support their side, they often do it. And I have a whole video on how I recommend selecting an accountant that you can watch next.